Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is to get everything you need to know in 90 seconds at 9 o'clock with news. It's all about inflation and policy interest rates today. American CPI inflation was up 8.5% in March, driven by rising petrol prices. This is almost exactly as markets had expected and is a rise from 7.9% in February. The lack of any surprise in this data has induced something of a relief in financial markets. But we should note that at these levels, American consumer prices are rising faster than anywhere else in the G7 major advanced economies, even the EU. The US retail expansion rolls on, with a key survey showing it rising at its second highest rate in the past 6 months, and far more than can be accounted for by inflation. Even the American monthly budget statement didn't surprise, coming in with a modest, for them, March deficit of $193 billion, almost exactly the same as February. But at this level, it is half of what it was in March 2021 and on track for an annual deficit of $1.7 trillion and almost $1 trillion lower than the same period a year ago. Part of the improved American economic performance is because their industrial sector is humming, and one part of that is due to aircraft sales. Boeing said it had sold 145 planes in the first 3 months of the year and 14 straight months of net new sales as the travel rebound accelerates there. And Japanese machine tool orders have come in very strong indeed, up 30% in March from a year ago, up 20% from February. It is their second best month ever. But supply chain issues are hurting. Toyota has told its major suppliers that it intends to reduce global output to around 700,000 vehicles for the next month, down a little more than 10% from its original plans. In Australia, business conditions surged higher in March and confidence also strengthened. Trading conditions and profitability rose markedly, suggesting demand remained strong and employment also rose. The improvement was largely driven by the retail sector. Overall business confidence rose, continuing the steady rise since December. All eyes will be on today's RBNZ official cash rate review due out at 2 p.m. today. It seems to be a line call whether it will be either a 50 basis point rise or a 25 basis point rise, with 25 basis points marginally preferred by analysts. Later today, the Canadian Central Bank is having a similar review, and most observers there think a 50 basis points rise is likely for them. The US Treasury 10-year yield has given up all of yesterday's rise, now down 6 basis points to 2.72%. But the price of gold starts today at $1,971 an ounce, and that's up $24 from this time yesterday. And oil prices are up $6 at just under $100 a barrel in the US, while the international Brent price is now at $104 a barrel. And the Kiwi dollar will open today a half a cent firmer at 68.7 US cents. Against the Australian dollar, we're marginally softer at 91.9 Australian cents, and against the euro, we're at 63.4 euro cents and firmer also. That means our trade weight index starts today at 74.6 and up 40 basis points from this time yesterday. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.